Okay, hi everyone. Am I audible? Is my screen visible to everyone? You can reply in the chat box. Okay, we'll just start in 1 minute. There are people joining us right now. Okay, hi everyone. I'm Afshana Afrin. Welcome to the FR Master for March 2026 webinar, day one. And again, please give me a confirmation if I'm clearly audible, if I'm visible. My screen is visible to you guys, right? Okay, thank you for the confirmation. Now, let's not waste any time. Let's start with our webinar. So, let's start with a small introduction about me. I am Afshana Afrin. I'm from Delhi and I'm an ACC affiliate. I did my Bachelor's of Commerce from Jamia Millia Islamia, which is in Delhi, and I'm also doing MBA in Finance and Operations right now. And soon, within few months, I will be graduating. And I have been a SPR World Rank holder. I got All India Rank 2 and World Rank 6, and I think I scored 93 marks. Yeah. And I have done internship at EY India and Simulani Solution, where I worked on core accounting and public policy research. Okay. And currently I'm providing mentorship for FR and SPR at Being ACCA. And just this is my second session actually. And I conduct test series and I conduct mock evaluations. Okay, so this was a little brief introduction about me. Now let's come to the main point of why we all have gathered over here. Now let's simply skip to the main point, which is the worldwide passing rate of financial reporting. See, the passing rates is in between 48 to 51 percentage, right? Which is a fantastic pass rate, right? Because FR is one of the paper which most of the students appear for at first. After getting exemptions, they try to appear for FR first, and most of them actually pass. Like, right, 48 to 51 percentage is the pass rates. And if you go through the past papers, like I hope you guys have gone through the past papers by now, the paper pattern is quite repetitive, right? Unlike other paper, unlike PM, unlike FM, where you might get anything in your section C, in FR, it's not like that. You know what's going to come. What you need to focus on is the practice, right? So in December 2025, which was my first batch of students for BNACCA for the test series. we had a pass rate of 78%, which is way higher than the worldwide passing rate. So I believe that as long as you are consistent in preparation, you are putting hard work, you will be able to pass your exam. Right, FR is not any rocket science. It's just that the syllabus is a bit huge, but then if you practice the right way, you will be able to pass. Right. So, can I know how many of you are giving FR for the first time? How many of you are, going to reattempt the paper this session? You can comment down. And most of you, if you're reattempting the paper, you might be stuck in, 47, 48, 49, right? So I hope whoever is reattempting, this will be your final attempt, right? You have to get rid of FR this time, right? And whoever is giving for the first time, I hope that we all pass together, right? So, okay, let's move on. These are the feedback which I got from my FR test series for the December 2025 session batch. Uh, so you can go through these like briefly. Okay, so these are the feedback from the students who were with me for the test series. And most of them, like we had a pass rate of 78%, right? So many of them passed, and whoever could not pass, they were stuck in 49, 48, right? So at times you can also say there is luck which plays when you're giving exams. So it could be due to luck. You should never blame yourself. It could be for your own betterment. Right. So let's start with the exam format. So by now, everyone must be aware of the exam format. It's a 100 marks paper. You have 3 hours to complete the exam. We have got three sections, right? Section A, B, and C. Now, section A has got 15 MCQs of 2 marks each. So you have a total of 30 marks. And then we have section B, where there are 5 case studies each with 5 questions. And so in total, you have 15 MCQs of 2 marks each. So you get 30 marks over here, right? But then the main problem in section A and section B is that if you don't get the correct answer, you will get zero, right? And if you get the correct answer, you will get entire full 2 marks, right? So that is one drawback. Like even if you make a small, minute decimal mistake or if you add an extra zero, then you will lose your entire 2 marks, right? So this is one drawback of section A and section B. Coming to section C, there are 2 case studies for you. 2 constructive response questions are there, and each are of 20 marks, right? So question one is normally group accounts or single entity question. Now it depends on your luck actually. You might get group accounts, you might get single entity, but then it's important that you guys are ready with full preparation on both of them, right? Because anything can come in your paper. Okay, and question number two, which is for 20 marks, it's interpretation question, where in interpretation question, you have ratio calculation, right? So I believe at least 5 marks are for ratio calculation, right? So if you know 5 marks is 3 marks for you, right? We know ratios. We are doing ratio calculation since our 11th standard, right? So ratio calculation is something which you should definitely not miss those free marks, right? But then these days, ACCA is asking a bit of complicated scenarios in ratio also, where you have to make adjustments before calculating ratios, right? So make sure you have proper knowledge, you are reading the case study properly, you are understanding the requirement properly, and then you're calculating the ratios, right? Otherwise you will lose these free 5 marks, right? And other is interpretation, where you're supposed to analyze the company's performance. So that is another very high scoring area actually. But then for that, you need consistent practice, right? Okay. But the best thing about section C is that you get marks for your working notes, right? Even if you make some mistakes in your figures, maybe in group accounts you have made some mistake, you will still get marks for your working notes, right? Unlike section A and section B, where you get either 2 marks or 0 marks. In section C, you get step markings, right? So this is the way you can maximize your marks. You should focus and you should aim to complete your entire paper, right? Proper time management should be there, and you should complete section A, section B, and section C. Okay. Does anyone have any doubt in the paper pattern? And I believe most of you are going to give the March paper, right? So we have just few days left for the exam. Yeah, you get marks for the working notes. So it's important you make clear working notes, right? It actually depends on the examiner also. If the examiner is very happy, then you might get extra marks for working notes. If you have proper if you have, like, you're able to practice diligently, you are able to practice in the right way, then these 10 days, 12 days are enough for practice for FR. If you have covered the syllabus, then you can complete the practice in 10 to 12 days, right? So let's move to next slide, where we're coming to the course structure. So over here, I have tried to divide the entire syllabus into 6 areas, right? And as you can see, there are 4 major areas, which is the accounting standard. Obviously, by now you know that there are a lot of accounting standards. Another major area is group accounts. Then we have single entity questions, and then you have interpretation and ratios. These are major areas which will come in your paper. If group accounts is not coming in your section C, then it will show up in your section A or section B. So there is no way you can skip group accounts, right? This is very, very important. So pay proper attention and try your level best to cover the syllabus. If you still have time, if you have not covered certain chapters, if you have skipped something, you still have time, you should cover the entire syllabus, right? Okay, then in minor areas, you have the conceptual framework, you have the technical articles, then we have statement of cash flows also. So statement of cash flows, maybe it might appear in your paper in section C, right? Or it might come in section B, section A. So again, statement of cash flow is also something which you cannot skip. Try your level best to cover this also. I have given it a minor area status because it's not frequently tested, but who knows, it might come up in your paper, right? Okay. And coming to next slide, one of the most frequent question which everyone asks me is which chapter is important, which chapter should I do, and then which one should I skip? And I've seen this in exam centers also when I used to give my ACC exams. I have seen students who go like, they have skipped this chapter, they have skipped that chapter. See, there is no point of asking such a question. There is no point in picking certain chapters and you're ignoring some chapters, right? These exams are based on your practice. It's also based on your luck, right? Like, what if you skip an important chapter and that comes for proper 15 marks, right? What if it comes for 20 marks? Then, in that scenario, you're basically losing your own marks, right? If by skipping or making selective decisions, you are losing marks, right? So just remember, anything can show up in your paper, and you can't just pick and choose which chapter to do and which chapter not to do. So if by now, if there is a chapter which you guys have skipped, then try your level best to cover that chapter within the days which is left, right? Okay, so let's come to the next slide over here. Now let's come to the main focus. Why are students failing in this paper? Right. So directly let's get into the points. First one, the most common lack of practice. Right. So you should be giving appropriate or ample amount of time for practice, because FR is more of calculations, right? Your skill level papers are mostly of calculations. Then you have your final papers, right? The professional papers are mostly theory, because they believe that your calculations are tested in your skill level paper, right? So your entire focus should be practice. You practice, you should know how to calculate each and everything, right? So by now, I hope that you guys have solved at least one exam kit, right? And you guys must have practiced on Study Hub, right? Have you guys practiced any one exam kit? Have you guys practiced on Study Hub by now? You should be done with at least one exam kit, and you should, you still have time. I recommend that if you have not completed the exam kit, there's no problem. You should directly move on to Study Hub, right? Practice on Study Hub. Study Hub has become very, very important. There have been scenarios, it has happened with me actually. I went to give my PM paper and they were literally copy paste questions from the Study Hub in my real exam, right? So this can happen with you also, right? What if there are questions which are coming directly from your Study Hub, right? So don't lose these free marks. You should um, practice the questions on Study Hub. There's still sufficient time. Even if you give 3 days for Study Hub, then you will be able to cover the questions on Study Hub, right? So this is your sign that you practice from today on Study Hub if you have not practiced. And those who have already practiced on Study Hub, you can quickly brush through the questions, right? You can directly go and you can see which question am I again in which question I have doubt, right? So you can, if you have sufficient time, then you can again go through the Study Hub questions, right? Because in the end, if you realize Study Hub questions are kind of complicated, I mean, I used to find it complicated when I was giving my paper. So it is kind of complicated, and it is kind of similar to the exam difficulty, right? So practice on Study Hub and go through it again if you have time. You We have, like, at the end of each chapter on Study Hub, there is a quiz section, right? So that is something you should practice. Quiz section. Okay. Then coming to next point, which is lack of time management. So see, you have got 180 minutes to complete your paper, right? So that comes to 1.8 minutes per mark, right? So if you stick to the time limit, if you complete your section A, if you complete your section B, both of them in 100 minutes, okay, take 90 minutes for completing your section A and section B. That's still sufficient time for you to complete section A and section B, right? And rest 90 minutes, you can basically spend 90 or 80 minutes, you can spend on your section C, right? And if you have some time left at the end, in that time you can go through your answers quickly, right? So one thing I want to highlight is that if there is a MCQ, if there is something which you are not able to solve, don't panic. Don't be like, oh my god, I'm going to mess my paper, I have no idea what to do. So this is something you should not do. You should be calm, because the more you panic, the more your brain will freeze. Right. So simply, if you don't know a question, if you don't know MCQ, then you should mark the question. There is an option to flag the question. Right. So flag the question, then simply move on to next question. Okay. Don't think about the question which you could not attempt. Normally, if you open your exam in, like, when you go in your real exam hall, the first question is always some crazy question, right? I have never been able to complete the first question of any of my skill level paper, because they make it in such a way that at the first itself you completely lose your mind at what is this? I have no idea what is this, right? So simply, if you don't know a question, don't panic, mark the question, and then move on to next question, right? And just remember this also, that if the first question is difficult, and if it's taking you a lot of time, then just remember the second one will be very easy. You will easily be able to solve the second one, and you might solve it within some seconds, right? That's how the papers are made. You have equal amount of difficult questions and you have easy questions, right? And the paper is made in a way to pass you actually. So just don't panic, and mark the questions which you are not able to solve, then move on to next question. And then after you're done with your entire paper, if you have time, then come back to the questions which you could not solve and then try solving the question, right? So this is something, time management is very, very, very important. And don't waste your time anywhere. Don't sit and overthink in your exam also. Okay, so next point is that um, unable to understand the question or unable to understand the requirement. Now, if the question is asking you to round off to the nearest 100, right? And if you are not doing this, then you will lose your entire 2 marks, right? In section A, in section B, that's the scenario, right? If by mistake, if the question is asking you answer in millions, but then you have written the entire figure, right? So you will lose your 2 marks. Even if your answer is correct, you will lose your marks, right? So you should pay proper attention to the requirement. Calmly read the question, understand what the requirement is asking you, and then write the answer, right? Yes, another example I had is that ratio calculation. Now they are asking you to make adjustments and then calculate the ratios, right? Like for example, if you are supposed to calculate ROCE, right? And they have mentioned over there that ROCE should be calculated without a specific item, like for example, without the profit on sale of machinery. Then in that scenario, if you calculate the ROCE with the profit, then you will lose your marks, right? So understand what the examiner is asking you, understand the requirement, and then accordingly answer, right? Don't panic, and don't be anxious in your paper. You should think that this is just an exam. I can pass this. Right? It's actually just an exam. You can pass it. Okay. So just pay extra attention to the requirements, the question, and understand everything. Right. So the next point is poor interpretation and analysis. Now, this is something which most of you are scared of. Right. Ratio analysis. Ratio calculation is easy, but then explaining the ratio, what the ratio means, is tough, right? So just remember, if you write general theory answers, if you memorize certain points and then you try to apply that in your paper, then you won't score any marks, right? You need to calculate the ratio, comment on that ratio. What is that ratio saying? What does that ratio even mean? Right? Explain the impact of the ratio, then only you will earn your marks, right? And right, that's the way you earn mark. As long as you are giving proper analysis as per the case, right? No generic answer will earn you mark, right? As per the case, right? And the trick is easy. It's easy actually. You understand the case, you write as per the case, and write as per the mark also, right? So when I was evaluating the answer script of my test series students of ratio interpretation, I realized that most of them could write sufficient for 6 marks. But then, when the requirement was to answer the interpretation for 12 marks, the points were insufficient, right? So, if you don't write enough, how will you get marks? Right? So if the examiner is asking you to do interpretation for 12 marks, you should have 12 small paragraphs, right? First of all, never write in points. Please don't write in points in your paper. It looks very unprofessional and will not help you to score marks, right? Even if you open Kaplan Kit, if you open Study Hub answers, they don't write the answer in points. They have written in small paragraphs, right? So try your level best to write in paragraphs. 12 marks means 12 small paragraphs, right? That should be the way you write interpretation answers. Okay. Next point is vague and generic theory answers. Again, the same point that you can't just expect to earn marks if you write generic points, right? Just like how in auditing, you have to write substantive procedures. But then if you just memorize some substantive procedures and you write in your paper, do you think examiner will give you marks? No, right? You have to link the substantive procedures to the case study, and that's the only way you can get marks. The same way in FR, you're supposed to link your points. Okay, you can memorize few points. I have an PDF which I have made for my students where I have written some points for ratio interpretation, right? So what I say, you memorize the points, but then link those points to the case, right? The points should match the case, or else there's no point. Examiner will not give you any marks. Okay. Next reason why students fail is unclear workings for section C. As I mentioned earlier, that the examiner will give you marks for workings, right? If you don't show proper working, if you don't show proper calculations for ratio calculations, especially, then you will lose your marks, right? So make sure you are presenting your workings. And the next point is not giving a mock exam. Right. So another main important reason why a lot of you might fail on 45, on 43, 49, the problem is that you know that you have not given a mock exam and you don't know how to deal with the paper. Right, and you will panic. You don't know how to sit over there and write entire paper for 3 hours. So you should be able to give at least one mock exam before the exam day to know where you stand. Right. If you give a mock exam, you will be able to understand that I'm scoring in my 70s, I'm scoring in my 60s. Okay. Right. So in my real exam also, I should be able to score as much. Right. Normally, how much ever you score in your mock exam, you typically get around that same marks, right? So give a mock paper very seriously before the exam. And then, if possible, then get it evaluated by a tutor. And then the tutor will explain how to improve your answer, right? So, mock exam is very, very, very important. Okay. Next, I have uploaded a YouTube video where I have mentioned the common mistakes which are done by ACCA FR students. So you can go through this YouTube video also. I will share the link in the comment section, in the chat box actually. Just one. You can go through this video in your free time, and then you will get more idea um, where other people are making mistakes. And I have got these points from the examiner reports, right? So that way you can understand what the examiner is expecting from you also. Okay, so I'm sharing the link. You can save this and you can watch it later on. I will also share this on the WhatsApp group. Yeah, I will share the interpretation PDF also. Okay, so you can watch this YouTube video and then you can understand what are the common mistakes, which I am not saying. The examiner is saying this, right? Okay, so now let's move on to next slide, which is the agenda for the webinar. Now we have gathered over here to learn something, right? So first day, which is right now, we are going to do a revision of IAS 2 inventory. We will do a revision of IAS 10, IAS 38, IAS 16, and 36, right? And next, we will solve section A questions, the approx 8 questions from the examiner report, which was released by ACCA, which is the September-December 2025 paper, and in March-June 2025 paper. Right. ACCA releases some questions, just few 4 questions per quarter they release. I mean, not even per quarter. Per year they release 8 questions for practice purpose, right? So we are going to solve that for section A, and then we will also understand what the examiner is saying. Okay. And do you guys need a break or shall we continue? Yeah, you will get the recording for this, I think by tomorrow. It will be available on YouTube. Okay. Okay. Now let's start. So we will start with the revision. Since most of you are saying to continue, we will just continue with the session now. So we'll start with the revision of the accounting standards. Simple. I have made this basic flowcharts of the standard. So just 1 minute. Um, okay, I hope everyone can see my screen properly. So we will start with IAS 2, which is inventory. Now, inventory examples are raw material and work in progress, right? So initial measurement of inventory is at cost. You have to capitalize the purchase cost, the directly attributable cost, the cost of bringing the inventory to the present location and condition, right? So initial measurement is at cost and you have to capitalize any directly attributable cost. Okay. Second, which is the subsequent measurement. Subsequent measurement is always at the lower of cost and the NRV, which is fair value less cost to sell. Right. This is very, very brief revision of the accounting standard. And by now, I hope everyone is aware of this. Let's just revise together. Okay, so initial measurement is at cost. You have to capitalize any directly attributable cost. Subsequent measurement is at the lower of cost and NRV. And we have got three evaluation method for inventory, which is the AFCO method, average cost method, where you simply take the average of the cost of the inventory. And then we have FIFO method, which is first in, first out, where the inventory which has entered the warehouse first will be sold first, right? And then we have the LIFO method, which is last in, first out. So basically, the inventory which I got today, I will sell that first and not the inventory which I got last week, right? And just remember, LIFO method is not allowed, it's not used, it's not applicable in our syllabus, and in real life also not. I don't think any company uses LIFO method, right? So this might come up in your paper. They might ask you something about LIFO method, right? So remember, LIFO method is not allowed. It's not permitted as per ACCA. Okay. Now let's move on to IAS 10, which is simply events after reporting a reporting period. So we have got two events after reporting period. We have adjusting events and the non-adjusting events, right? So adjusting events are those events whose conditions or proof of existence is there at the reporting year end, right? Now, if, like for example, if in September we have a client who can potentially go bankrupt, right? So we know that there is a client who can potentially go bankrupt. The client will not be able to pay us back, right? Now, after the year end, like after December, like in suppose in January, the client actually is going bankrupt and the client is unable to pay us back, then in that scenario, this is an adjusting event. Why? Because we know that we had a client who had some issues. So since there was some proof, there were some conditions of existence at the year end, these are adjusting events, and proper adjustments are to be made for this, right? So more examples is sale of inventory after reporting date, bankrupt, customer goes bankrupt, then there's discovery of fraud or errors, out of court settlement of a legal claim. So these examples are applicable only if there is some proof of existence, right, at the year end. Next, we have non-adjusting events, events which provide indications of existence, but then it's after the reporting year end, right? Like for example, my reporting year end is December, right? December 2025 is the year end. However, in March, right before I am finalizing my financial statements, there has been fire in the warehouse, right? So this is non-adjusting event. Why? Because obviously in December 2025, when we were like when it was the reporting year end, at that time we didn't know, right, that a fire will happen in March. So obviously there was no indications, there were no proof of existence at the reporting period, and this happened simply after the reporting year end, right? So this is non-adjusting event. However, these are to be disclosed if it's material, right? So just remember, adjusting events are those events which have proof of existence at the year end, and non-adjusting events are those events that are happening after the year end, right? And you disclose non-adjusting events, and adjusting events are adjusted in the financial statements. Okay. Okay. Next, we have IAS 38. Okay. Next, we have IAS 38, which is intangible assets. And one something which is tested from this accounting standard is your research and development expenditure, right? So let's check. So intangible asset is an asset is intangible asset if it is non-monetary, if it is identifiable. Now, what does identifiable mean? If it is, if it can be sold separately, if it is arising from any legal contractual rights, then it is identifiable, right? And if it is something which is controlled by the entity as a result of past events, it can generate economic benefits. It does not have a physical appearance, and the cost can be reliably measured, right? So this is a definition of intangible asset. And the initial measurement of intangible asset is always at cost. Right. And subsequent measurement is either at cost or at revaluation. Right. So normally it's just cost which is used by the companies, and revaluation model is used only if there is an active market existing. However, for intangible assets, it's very rare that there is an active market, because intangible assets means brands. Right. If I have a brand, then it's highly possible that there is no market for this brand, right? So in that scenario, we have to continue with cost model, and there is no active market, so we can't use revaluation model, right? Then we will speak about the life of intangible asset. There are two types of life. We have got definite life and we have got indefinite life, right? Definite life means we know the years for which we will get benefit from this asset, right? Like for example, if you have a license, then you know that this license will work for 5 years, right? You have an estimate of the useful life, right? So if the intangible asset has definite life, then you are supposed to amortize it over the useful life. However, if you don't know the useful life, like for example, if I have another license and I don't know for how many years can I use this license, right? Then in that scenario, you can't amortize it obviously, because you don't know the useful life. However, you have to do annual impairment test, right? Annual impairment test is done, and you also do review of the intangible asset to check maybe if you can figure out the useful life or not, right? So there are two tests done actually. There's annual impairment test done, and then there is also a test done to check if maybe now if I can find out the useful life, right? So just remember these two. Definite life means amortize. Indefinite life means annual impairment test, and yearly test is done to figure out the useful life. Okay. Next, we have internally generated intangible assets. Now, anything which the company has internally generated, it can never be recognized. Why? Because obviously we don't know the fair value. Like for example, if I have a brand which I'm internally generating, obviously there's no market for it. I have no idea how much to value it for. So such an item cannot be recognized in your financial statements, right? Just like that, goodwill also cannot be recognized. Internally generated goodwill cannot be recognized. Okay. Next, we have the research and development expenditure. So this is something which is tested in your paper. You might be asked to calculate how much is the expense of research, how much should be capitalized as development cost, how much will be your amortization cost, right? So research is basically when the company is trying to test a prototype, right? So anything which all the cost which is incurred in the research phase, it is supposed to be expensed out in SOPL, right? But then once the research is done, once the prototype is made, right? Next, you start working on it. You start developing the asset, right? So, once the research is done, you are developing the asset. So, if the pirate conditions, which is PIRATE, pirate conditions are met, then you're supposed to capitalize those. Capitalize as an intangible asset, right? So you know the pirate conditions that there is a probable economic benefit. You have an intention to sell something which you're making. You have the resources to complete the development. The management is, completely involved in development. The development which is being made is technically feasible, and you can also estimate the cost of the development which is happening, right? So these are the pirate conditions, and you should always evaluate the pirate conditions. If the pirate conditions are met, then you capitalize as an asset, and after the development is done, that means suppose we're making a small suppose you're making a small toy or something, then in that scenario, once the development of a toy is ready, like the toy is ready for you. Now, since the toy will be used, or since a plant, okay, let's take an example of a plant. So if there was a plant which was being developed, and once the development of the plant is done, you start using the plant. Now, when you start using the plant, you're supposed to amortize the cost, right? So, amortization is done. So, when the development is done, right? So, any cost which is incurred in research phase, it will go as expense. Any cost which is incurred in the development phase, which means the pilot conditions have met, you're supposed to capitalize it as an asset, and then you do amortization once you start using the product, right? Okay. So does anyone have any doubt till now in any of the accounting standard which we just revised? Okay, now we will move on to the next one, which is very, very important, property, plant, equipment. So property, plant, equipment is any tangible asset which is used for production, which is used for administrative purpose, right? So simply initial measurement is all at cost. Right. You capitalize any directly attributable cost that is used to bring the plant to working conditions. Right. Like site preparation, delivery and handling, installation cost, testing cost, any professional fees. So all those costs are capitalized, right, at the initial measurement. Okay. And then we also have something called dismantling and restoration cost, right? Decommission provisions are made. Right. So in that scenario also, just remember dismantling, decommission cost, all these costs are also capitalized as the property, plant, equipment at initial measurement. Okay. Next, we have the subsequent measurement. So, subsequent measurement can either be at the cost minus depreciation, or at revaluation model, right? So, if we use the cost model, it's the basic cost uh, minus depreciation, and then you get the carrying value, and then that's how you keep on depreciating, and then you get new carrying value every reporting year end, right? But then if you are using revaluation model, in that scenario, the asset is revalued to the fair value, right? And any gain or loss goes to OCI. So at the year end, you revalue the asset to the fair value. Okay. And you have certain conditions for evaluation. This is also something which is frequently tested. Let me zoom on to this. Right. So conditions for evaluation, like you should know this, that the fair value should be reliable. Right. So if you are revaluing one property, then the entire class of the assets must be revalued. Right. All assets in the class should be revalued at the same time. Okay. And revaluation should be done at every year end or on regular basis to ensure that the revalued amount that should not differ from the fair value, right? So revaluation should be performed regularly to ensure that the values are up to date. Okay, so this was a brief revision of IAS 16, and this is very, very important. They might ask you about revaluation conditions. They might ask you about something confusing. MCQ can come up from what cost to be capitalized, right? What cost should not be capitalized? What happens to the revaluation gain or loss? So this is something which can be asked. Okay. Next, we have IAS 36, which is another important accounting standard, impairment. Right. So, when does the impairment happen? When the carrying amount is more than the recoverable amount. Okay. Simply, when the CA is more than the RA, then it's impairment. And impairment is an expense, and the recoverable amount is the higher of the fair value less cost to sell or the value in use, right? And fair value will be given in your question. They might ask you to make certain adjustments, like the fair value and the cost to sell. So they might ask you to make certain adjustments in cost to sell. They might ask you to calculate the value in use. So you should know how to, a value in use is basically the present value of future net in cash inflows, right? So the examiner might directly give you the value in use figure, or or they might ask you to calculate the value in use, right? So pay attention to the question, and you should know each and everything. You should know how to adjust the fair value less cost to sell. You should know how to calculate the value in use. Right. So next, impairment will go in profit and loss account, obviously has expense. And if there is okay, then there is another thing that if revaluation surplus is there, revaluation gain is there in OCI, revaluation surplus is there in the OCI, and if impairment is happening, then in that scenario, the impairment loss should first be deducted from the OCI, right? You should first finish off the revaluation surplus, then any remaining impairment loss should be shown in the profit and loss account, right? So in case of revaluation surplus, you first have to show or reduce the impairment from the OCI, and then any remaining goes to SOPL. Okay, and there might be a scenario of reversal of impairment. Just remember that you cannot reverse an impairment like until you can reverse impairment um, till the carrying amount of the asset if impairment did not happen, right? So that is the max ceiling of reversal of impairment. So this can also be asked in your paper, like reversal of impairment cannot happen more than the carrying amount that would have been if impairment did not take place. Okay. Next, we have CGU, which is cash generating unit. These are simply smallest identifiable units which independently generate cash. So basically, when you cannot value each and every asset, you join them together and then you consider it into one unit. And then you try to find out the value and you try to find out the impairment, right? So CGU calculation is also asked in your paper. So you should know how to allocate impairment to CGU. Right. So first you have to find out the carrying value of the entire unit. Then you have to find the recoverable amount of entire unit. So carrying value is simply given in your paper normally. Recoverable amount you might have to find out. Then you have to find out the impairment. Right. So, and then there is a certain way of allocating impairment to the individual assets, right? So first you have to allocate the impairment to any specific asset which is mentioned, which has been impaired. Like for example, it says that the plant has been completely impaired, or the plant is completely useless, or the machinery is completely useless. Then in that scenario, first impairment expense will be deducted from that asset. Then you have to the leftover impairment is allocated against the goodwill. You have to finish the goodwill, and then any pending impairment loss is to be rata basis. You have to allocate it based on the remaining assets, right? And just remember that in your question there will be they will give you current assets just for confusing you, right? So just remember that current assets are normally at the recoverable amount. Right. So you don't have to charge any impairment for that. Right. And they also might give you an asset which is already at a recoverable amount. Right. So in that scenario, do not impair it because it's already at the lower of carrying amount and recoverable amount. Right. So read the question carefully. There might be different scenarios. Okay. And reversal of CGU. Yeah, reversal of impairment happens, but then just remember that you can never ever reverse impairment on goodwill. Okay, so any doubt in these standards that we just revised? Okay, let's just take a 5 minute break. We will be back by, okay, let's take 4 minutes break. We will be back by 9:30. Right, it's 9:26 over here. We'll be back in 4 minutes. So be back here by 9:30. Mm, okay. Okay, hi everyone, I'm back. So let's begin. So now we will do some question practices of section A. These are the latest questions which have been released by the examiner. Right. So let's do these questions and I will be giving you guys like for the calculation question, I will give you guys 1 minute. You guys can solve the question and then type the answer in the comments, right? And for theory question, I'll give you just few seconds and then we can solve these questions together. We can practice these questions together, right? So are you guys ready for these question practices? Please keep a paper and pen or maybe open Excel on your laptop. Then we can start with the practice. Okay, shall we start with the practice then? Okay, so this is the first question. I'm giving guys half a minute. Please go through the question and then type your answer in the comment box. Okay, so we have an answer over here. So now let's read the question. I have seen you guys answer. So let's read the question. So this question is asking us simply about IFRS 16, about short-term leases, right? So if you just do a quick revision of IFRS 16, IFRS 16 says that if you have an item which is of low value, like which is for short duration, like for like 12 months, then you may, right, you might recognize it as an expense in your statement of profit and loss account, right? So over here, answer will be B and D, right? Why? Because if you see in the first and the second option, there's a very small difference, right? The difference is of this word, must and may, right? So over here, the examiner is trying to confuse you. They're trying to confuse you by saying that IFRS 16 has made it mandatory, right, to recognize as expense. However, IFRS 16 has not made it mandatory. A company might, a company may recognize something which has lease term of less than 12 months, something which has a low value. They may recognize in the SOPL has expense, right? This is not something which is made mandatory. Okay. And then, if you read the C option, it says that the company can apply the exemption. It says that the company can apply the exemption for low value underlying assets to all its new leases. Right. We don't have such a scenario. Right. You don't have to apply lease on all the assets. Right. So we're left with D option. And the D option says that the election for leases for which the underlying asset is of low value can be made on a lease by lease basis. Right. So the answer is option B and option D. Now for leases that have got low value, the exemption may be applied based on each individual lease. It's not important that you apply for all the leases. You can apply the election for leases for some of the assets, right? On lease by lease basis. So answer is option B and option D. Most of you have guessed A and C. No worries. We always learn something new. So just remember, it's not mandatory. IFRS 60 is not forcing you that you have to expense the short-term leases. No, you might expense it out, and then you can apply on lease by lease basis. Okay. Next is a calculation question, and I'm giving you guys 1 minute. Please calculate this and let me know the figures. We have a doubt over here. Lease by lease basis. Lease by lease basis is basically which is against the C option, right? C option said that if you apply leases for one item, you have to apply leases for all the options, for all the assets. So that's not the scenario. Instead, you can apply on lease by lease basis. Like for example, if I have a factory, I can get that factory on lease. Okay, but then the other item, which is maybe I am getting a plant, so maybe I don't want to apply short term. Like for example, if I get two leases, right? So one lease is for machinery and one lease is for building. Now both of them are for less than 12 months, right? But then I can choose that for this one I will do proper lease accounting. For the second one, I will do for short term accounting. Right, short-term accounting means I'll simply expense it out to statement of profit and loss account. Right. So lease by lease basis is that I have the option to choose what type of lease accounting I want to do. Like for different assets, I'll follow different method. It's not compulsory that if I am doing lease accounting, if I am going to expense out something, then I have to apply the same thing on all the assets. Okay. So So please solve second question and then let me know the answer. I need two values, one value for revaluation surplus and one value for the NCI. If you guys are done calculating, then please send the answer in the chat box. So now let's read the scenario and let's figure out the answer. So we have a company called A and we have another company called B, right? So A has acquired B 80%, and this has happened 1st January. Is my Excel sheet also visible to everyone? I think it is visible. Okay. So A has acquired B 80% on 1st January and the year end is how much? Year end is 31st December. Okay. Then it says that B, which is a subsidiary, B opening retained earning is given to us. How much is the opening retained earning? Just wait. B opening retained earnings 4.2 million. And then we have got NCI value, NCI at fair value is 3.2 million. Okay. Now in your paper, you can use Excel sheet or you can just manually solve this on the rough paper which you are provided, right? Okay, so over here we are supposed to find out the consolidated revaluation surplus and the NCI. Okay, so we will simply find out the revaluation surplus first. So over here we have the parent company, which is A, revaluation surplus given to us, which is 2.8 million. Now in this, we are going to add B's revaluation surplus, the subsidiary's revaluation surplus, right? So how much is the revaluation surplus of subsidiary given to us? It's given 2.6 million. But then, does the entire 2.6 million, will the entire 2.6 million go to the consolidated financial statement? No, right? Only 80%, which is the amount, which is the acquisition done by a company, will go in a revaluation surplus, right? So 80% of the revaluation surplus of the subsidiary will go over here, right? 2.6 million is the revaluation surplus, and then 80% is how much the parent company has acquired, right? So when you add both of them, you get 4.88, which is close to 4.9, right? So over here, your answer for revaluation surplus consolidated will be 4.9 million, right? Any doubt in this one? This was simple, just simple multiplication over here. And the revaluation surplus given to us was how much? B's revaluation surplus is 2.6 million. Out of 2.6 million, 80% is the parent, 20% is NCI. So simply 80% is of the parent and 20% is of NCI. Right. So simply in the revaluation surplus, we got parent company's revaluation surplus, which is 2.8 million. Then I have added the revaluation surplus of the subsidiary at 80% because that's how much A has acquired. Then you get 4.88, which is close to 4.9 million. So 4.9 million is the consolidated revaluation surplus. Then you have to find out the NCI value. So NCI at fair value is given to us. How much is it? 3.2 million. Over here, you will be adding the revaluation surplus, which is allocated to NCI, which I found out over here, which is 0.52. How did I find this 0.52? I simply got 20% of the subsidiary's revaluation surplus of 2.6 million, right? And then I found out, then we also have to apportionate some post-acquisition profits of the subsidiary to the NCI, right? So add profits of subsidiary. How much is the profit of subsidiary? It's not given directly over here. But then we know the closing retained earnings, we know the opening retained earnings. How much is the closing retained earnings of Bin's company? It's 7.6, right? And the opening retained earning is 4.2 million, right? So this is the profit of the subsidiary, which is post acquisition. Okay. But then NCI will get only 20% of this, right? So NCI will get only 0.68% of this. When you add all of them, you will get 4.4 million, right? So NCI is 4.4 million and your evaluation surplus is 4.9 million, right? Is this clear for everyone? If anyone has any doubt in this, then okay. Profits of subsidiary. See, profit. How do we normally find profit? Profit is simply the closing retained earnings minus the opening retained earnings, right? So, how much is subsidiaries closing retained earnings given to us? It's given over here, retained earnings 7.6 million, and the opening retained earnings is 4.2 million, right? So, simply you can find out the profit, which is 7.6 million minus 4.2 million. Right, 3.4 million is the profit which is earned by the subsidiary. However, a parent will get 80%, NCI will get 20%. Right. So over here, when you find out the NCI's value, which you will show in the consolidated financial position, you have to add only 20% of the NCI. Right. So when you find out 3.4 million's 20%, you get 0.68. Then you write over here, and then you get the NCI value, which is 4.4 million. Is this clear now? Okay, everyone, now let's move on to next question. This is kind of something which is from ratio interpretation, and so please read this and think very carefully and then let me know your answers. Okay, now we have got some answers. So now let's solve this. So this question is saying us that we have got two competitors and they are in the same industry. However, there's inflationary economy, which means that there's a lot of inflation. Prices are increasing, right? So prices are increasing. This is the main point for this answer, right? For this question, the main point is that there's a lot of inflation going on. Next, it says that deluxe company profitability ratios are higher than those of ribbon company, right? So they're saying us that the deluxe company, they're performing better, right? And they're saying that the deluxe profitability ratio is better. Now you have to find out that which accounting policy is causing the increase in profitability ratio of deluxe company, right? So when you evaluate both of the points, so first in first out method rather than the weighted average method for calculating cost of inventory. See, the main point over here is that it's an inflationary environment, right? There's a lot of increase in prices. So items which I purchased before will be cheaper than the item which I purchased today, right? You guys agree with this? Items which were purchased earlier when the inflation was lower, right, will have lower cost. And when you account for this cost, the cost of sales will be lower, right? Because something which you purchased yesterday will be cheaper than the item you will purchase today, right? So when you sell something which you purchased cheaper, it will lead to lower cost of sales. Now, if your cost of sales are low, then then the profits will increase, right? So profits are increasing, you will have higher profitability ratio, right? So over here, the dealer company, they are using first in first out method, which is why their profitability ratios are higher because they have purchased something which is cheaper, so cost of sales is lower and the profitability has increased. Now if they're using weighted average method, what happens in weighted average method? Like all the inventory, they're valuing it at the average cost, right? And this is highly dependent on the weighted average method itself is highly dependent on the lower amount and the higher value, right? So if you buy something which is expensive, the weighted average increases, right? So when the weighted average cost is higher, it leads to higher cost and it leads to lower profitability. Right. So when a company is using FIFO instead of weighted average cost, then the profitability will be higher. So over here, the elect company is the answer. Right. So the elect company is the one who is using the FIFO accounting policy, which is leading to higher profitability. Okay, most of you got this one correct. So good job. And next we have the cost and the revaluation model for the carrying amount of property. See, this again, inflation is there, right? You are using cost model and you have revaluation model. So when you write something on cost model, you have depreciation. So your carrying amount is decreasing, right? Now, since your carrying amount is keeping on decreasing, your depreciation will also decrease, right? Will it decrease or not? The depreciation will decrease, which means that the profits will increase, right? So over here, answer is dealer company again, because when you use cost model, the carrying amount of the property will keep on reducing, right? Now it reduces because of depreciation. You have lower depreciation as time passes by, and then it leads to higher profits, right? Increasing the profitability margins. Now over here, when you use revaluation model, it means that yeah, so I was saying that cost model will make it cheaper for the company when you compare it with the revaluation model. Does anyone have any doubt in this one? Yeah, that's the problem, right? Because over here you were supposed to choose two options. Now, if one option is correct, but the second option is wrong, then you will lose your entire 2 marks. That's the problem. And another thing is that here, over here, the answer is still short. You're supposed to choose just two options, right? But then there have been scenarios where they ask you, where they make you choose six options. Six options. They make you choose four options. Right. So in such scenarios, you are supposed to get four correct answer, or else you won't get the 2 marks. Right. So that is the problem in such questions, which is again the same thing. You either get 0 marks or you get full marks. Okay. Okay, just I'll explain the second option. Just 1 minute. Yeah. So the second option, it says that whether a cost model or revaluation model will give a cheaper, will lead to higher profitability, right? So in cost model, what happens is that you have the cost, then you charge some depreciation, so the carrying amount of the property decreases. So as time passes, right, your depreciation will keep on you'll charge depreciation, right? So the carrying amount of the property will keep reducing, right? So carrying amount of the property will reduce, the depreciation will reduce, and then you will have higher profitability, right? So this is why the cost model which is being used will give a higher profitability as compared to revaluation model, right? Okay, now let's move on to the fourth question. This is quite a simple question. So I'm giving you 1 minute. You can read this and then let me know the answer. Okay, over here in question number four. Okay, question number four, they're asking us which of the following statements are true, right? So over here, the answer is A and B. Why? Now let's read the entire question. That first of all, IASB conceptual framework, it assists all the parties to understand and interpret IFRS accounting standard. Yes, right. We have a special accounting body which is just for interpretation of the accounting standards, right? So A is the answer. Second point says that the IFRS does not override any IFRS accounting standard or any requirement in IFRS accounting standard. Is that true? It is true because IFRS is more of a principle based approach, right? It's not important that conceptual framework um, like it does not emphasize that if there is one accounting standard you have to follow that accounting standard strictly, right? So in the conceptual framework, the it does not override any of the accounting standards. Instead, you can just apply it as per the company's wish, right? So conceptual framework does not override any IFRS accounting standard. Okay. And the C option says that it introduces the enhancing quality characteristics of relevance and faithful representation. Now, over here, this looks a very correct answer, right? But then just remember that relevance and faithful representation are not enhancing qualitative characteristics, right? These are the fundamental characteristics, right? Relevance and faithful representation are fundamental characteristics and not enhancing characteristics. Right. So C is not our answer. Okay. D says that it introduces materiality has an okay. It introduces materiality has an entity specific aspect of relevance based on nature only. However, the conceptual framework it states that materiality is based on nature or magnitude, right? It's not based just on nature only. Okay. So over here, you can simply just when you read first 2 points, you can know that those two are the correct answers, right? You can ignore rest of the points because simply when you read A and B, you know these two are the correct answers. Right. Whoever mentioned C over here, please um, pay extra attention when you're reading the exhibits, when you're reading the options, right? Because they are designed in such a way to distract you. Okay, so the answer is A and B. Okay, now I'll come back to question number three. Over here, I have a small example for you guys. See, over here, the question said that it is an inflationary economy, which means the prices are consistently increasing. right? So most of you understood the FIFO, this option, right? So to understand this, we have a illustration over here. Okay, so cost is given to us 500,000, and then on that depreciation of 20%, I have considered reducing balance method of 20%, right? So our depreciation in first year is 100,000. Okay, in second year our depreciation is 80,000. You notice how because of cost model the depreciation is decreasing, right? Depreciation has decreased by 20,000 approx. Right. So if depreciation is decreasing, it will obviously lead to higher profit, right? Higher profits means higher profitability ratios. Okay. Now, when you come to revaluation model, the carrying amount was 400,000. However, since it's an inflationary economy, the prices are consistently increasing. Now, the price of the building has increased to 600,000. Okay. Now, if the building's price is 600,000, depreciation you will charge on 600,000, right? So obviously depreciation will be higher now, right? Depreciation over here, you can see it's 120,000, which is very, very high, right? Compared to the depreciation in cost model of 80,000, depreciation is 120,000 in revaluation model, right? So depreciation is increasing as the fair value increases, leading to lower profits. Right. So if a company wants higher profitability, they will go with cost model and not revaluation model if it's an inflationary economy. So, in such questions, when you're getting confused, try to, if you are able to think quickly, try to in a rough paper, try to quickly write down an example and try to understand over there. If you are, if you are, if you have sufficient time, then you can do follow this method also, right? So is this clear for everyone now with the help of this example? And since this is inflationary, building prices are increasing, so depreciation will also increase, right? So this is just the crux of it. Okay, we will move on to the fifth question, which is a calculation question. This is consolidation. Please take 1 minute and then I'll solve this. Okay. Okay, did anyone solve this? I'll start solving this now. So, okay, so it's given we have a company called Global Co who acquired 55% of stake company. Okay, on 1st June, so this is our acquisition date, and retained earnings of stake was given 500,000. So I have made a small working note over here. I have written the opening retained earnings of S, which is 500,000. And then it says that stake co, like on the date of acquisition, the company has sold items to the like subsidiary has sold item to the parent, right? So when subsidiary is selling item to parent, at that time they will have some unrealized profit, right? So remember this, that since the sale is taking place, there is some unrealized profit in this, right? So the selling price is how much? Selling price given to us is 560,000, right? And the carrying amount of the machinery was 448,000. Okay. So how much profit did a subsidiary, which is stake company, make on this? They have sold something which is 448 for 560, right? So they have made profit. So this is the unrealized profit, right? This is the amount of profit that the subsidiary has made on the sale of machinery. Do you guys agree with this? And they have given you the remaining useful life. If they have given you some information, please remember that you have to use it in your answer. Right. So if they have given you the remaining useful life, there is something which you have to do with this useful life also. Okay. Then they have given you the closing retained earnings, which is 1.66 million for global company. So I have written the closing retained earnings over here. And they have given you the closing retained earnings for stake company, which is 740,000. Now, simply like we calculated profits earlier, we will calculate profit over here. So what will be the profit for stake company? Simply the closing retained earnings minus the opening retained earnings, right? So the profit which is earned by stake company in this year end is 240,000, right? Do you guys have any doubt till here? Okay, so what is the question asking us? The question is asking us consolidated retained earnings, right? So how will you find this? Simply parents retained earnings. How much is the parents retained earning? 166,00123. This is the retained earnings of the parent. Then how much of the profit of subsidiary will come in the retained earnings? Profit of subsidiary. How much profit did the subsidiary earn this year? 240,000. And how much is the ratio of the parent? Right. How much is the parent's ratio? It's 55 percentage. Right. So this is the profit of the subsidiary, which is allocated for the parent, 132,000. Right. You guys agree with this? Right. Next, we also have some sort of unrealized profit over here. Right. So, which was, see, you guys must be aware that unrealized profit is to be eliminated from the consolidated retained earnings, right? We will reduce the unrealized profit. So, over here, how much is the unrealized profit? We know 112,000 is the unrealized profit, right? So, this entire amount will be eliminated from here. Right? Did you guys understand this? 55%, right? So over here, I have simply taken the parents' retained earnings. I have taken the subsidiaries' profit, which was simply the closing retained earnings minus opening retained earnings, which was 240,000. Parents' percentage is 55%. So I have multiplied the profits of subsidiary into 55%. Then I have subtracted the unrealized profit in 55 percentage. Why did I subtract 55 percentage? Because since this is something which the subsidiary has sold to parent company, right? So the entire amount does not relate to the parent, right? Only 55 percentage of unrealized profit goes to parent. Rest will go to NCI. Right. So these are minor mistakes which you can make in your paper, where over here, instead of 61,600, you will subtract the entire 112,000, right? So that is a minor mistake which you can make. Now, other than this, you have excess depreciation. Why do you have this? See, now when the parent, any doubt in this? No, right? So see, excess depreciation is happening over here because when the parent acquired the machinery, they must have recorded in their financial statements at 560,000, right? But then the worth of the carrying amount of the machinery was 448,000, right? So the excess amount is how much? This much is the excess amount, right? So this is the excess amount, which means excess depreciation must be charged, right? This So this one, if you find the per year depreciation, depreciation per year will be 11,200. Right. So this is something which is excess depreciation, which you have to add back to the retained earnings. Right. So this is one adjustment you're supposed to make. Did you guys understand this? Any doubt in this? This might be a little bit confusing, but then this is also frequently asked. Excess depreciation concept. Let me explain this again. That subsidiary has sold the machine to parent for 560,000, right? But the carrying amount of the machinery was 448,000. So there's unrealized profit of 112,000 in the group, right? But then, as per the accounting standard, the profit must be eliminated because again, it's the same group doing transaction with each other, right? So the profit should be eliminated, right? So we have eliminated the unrealized profit from the retained earnings. However, the parent has recorded the asset at 560,000 and they must have charged depreciation on 560,000. However, the carrying amount was 448,000. So there is excess depreciation charged, right? So on the 112,000 amount, which is the excess amount recorded in the financial statement, on this, when you divide by 10 years, you will find the depreciation per year, which is 11,200. And then you have to add back the depreciation because this was not supposed to be recorded. And you will add this back because this was not supposed to be your expense, right? So when you add this back, your retained earnings will increase. And then the final answer is option number D. Okay. Yeah. Okay. Please look over here. This. You need to understand this excess depreciation part. This is very important. Okay, now let's move on to the next question. We have question number 6. This is comparatively an easier question, so please solve this and let me know. Or shall I directly solve this? Are you guys solving with me? These questions are a little bit difficult as compared to other questions, which is why ACCA has released these questions, right? So please practice with me. If anyone has found the answer, please you can comment it down. Okay, so what do we know over here? We have a company called Gamaraco. We have a company called Shindigo. Okay, 30 percentage, which means associate, right? So as per IS 28, we will follow equity method accounting. And as per equity method accounting, what do? We recognize at cost. If I simply have to make the format, we have consideration, how much the company pays, add profits in parent ratio. This is very important, right? Then less any dividend you receive, again in parents ratio, less any unrealized profit, right? This is normally the format, and then we have cost of investment. Okay, this is normally the format for associate accountants, right? So let's read the question. So G has acquired S for 207. Okay, 207 million. So we have the consideration of 207 on 1st January. Okay, when on 1st January? When is our reporting year end? It's 30 September. Right. So how many months into the year? We have 9 months. 9 months. Right. So 9 months before the year end, the parent has no, the Gamera company has acquired Shinty company 9 months into the year. Right. We still have 9 months left for the year to end. And then it says that okay, then it says that the associate had paid dividend of 22 million. Right. So if you receive any dividend from the associate, you're supposed to subtract it. So 22 million is the total amount of dividend and 30 percentage is for the parent. Right. You guys agree with this? Please remember in associate accounting, every figure which is given to you, you're supposed to multiply into the main company that acquires ratio, right? So into 30 percentage. If you don't multiply into 30 percentage, your entire answer will be wrong. So please pay extra attention to the dates. Right over here, they have given you 9 months, right? 9 months of the associate you have acquired. That's for 9 months, right? So over here, profits also you will apportionate for 9 months, right? So you can make a potential mistake in this. You might forget to multiply into 9 by 12. You might forget to multiply into 30 percentage, right? So these are the small mistakes you guys can make in your paper. Okay. So next, what do we have? The profit for the year is 62 million. So 62 million is entire year's profit. Is the entire year's profit is 62 million. We are going to multiply it into 9 by 12. We got the profit for 9 months, right? And the parents ratio, which is the Gamera course ratio is 30 percentage. So this is the parents profit. Okay. I keep saying parent, but I meant like acquirer and like Gamera company and Shinty company, right? This is not consolidation. We have no unrealized profit. So simply our answer is 207 plus 13.95, and then this one. So over here, see, the question is asking you to nearest million, right? So 214 becomes 214.35 becomes 214. So answer is option A. Okay. You guys have any doubt in this question? This was quite straightforward question. So remember, you have cost of consideration. You add the profits in parent ratio. If it has happened in between the year, then make sure you time apportionate the profits. And if there is dividend which is paid by the associate, then you're supposed to subtract it at the parent's ratio, right? If there's unrealized profit by any chance, again subtract it in the parent's ratio. Okay. Any doubt in this one? Shall we move on to next question? You can take a screenshot of this working if required. This is the solution. Okay, now let's move on to next one, which is question number 7. Over here, they're asking you the balance on the revaluation surplus. So please quickly go through the question, then we will solve it. Whenever you get a consolidation question, you should have this working note always ready with you. How much, who acquired who, at what ratio, and what is the date of acquisition, and what is the year end. Right, this is very important for your answer. Okay, am I audible? This is very basic. So if you have to find out this answer, simply revaluation surplus will be the parent's closing balance, which is 375, right? And what will be the post-acquisition subsidiary revaluation surplus? It will be 75 minus 50, right? And this on 80 percentage ratio will be for the subsidiary, right? So simply answer is 395. First, I have taken the parent's closing balance for the revaluation surplus, which is given over here, 375 million. And then I have taken difference of 75 million and 50 million. Why have I done this? Because this is post-acquisition figure. Right, when I do this, I'll find the post-acquisition figure, and that post-acquisition figure into 80 percentage, which is the parent's holding. Right, so I get 20 million. When I add both of them, I get 395 million. So your answer over here is 395. Right, 395. The examiner will try to confuse you by giving such scary questions in tables, right? So don't get confused. Be confident in yourself that you can solve it, and then slowly, but then smartly solve these questions. Okay? They are paying a lot of emphasis on consolidated MCQs, but then um, there will be MCQs from other accounting standards also, right? So let's move on to next one. This is finally an IFRS 9 question, which I believe is also a very, very important accounting standard. We have IFRS 9. Okay. So please go through this, and then if possible, then please let me know the answer. First March. There's only this is the final question. This is last question. Okay, now let's quickly solve this one. Okay, so this is question number 8, and your year end is how much? Year end is 28 Feb 20x7. No, year end is 28 Feb. Okay. So right now we are in 1st March 20x5. We are in 1st March. Okay. So, okay. And then it's 28 Feb 2006. And then the question is asking you the carrying amount of Beagle Company's financial asset on 28 Feb 20x7, right? Which means not this year, but next year. Right. So 28 Feb 20x7. This is another mistake you can make, that you don't pay attention to the year ends, and then you might simply write down the answer which you got for 28 Feb 20x6. Right. So this is one problem you can make, one mistake you can make over here. Okay. So this one confusing thing in this question is that they have given you a discount figure. So what do you do with this discount figure, right? So this is the main confusion. So over here, simply when you have to find out the um, opening value. So opening value over here, it's given to you. Nominal value is 3.5 million. And from here, you are supposed to subtract the discount, and then you get the opening balance, right? Which is 3.12 million. So when you, for ACM, you make this working note where you write the opening balance. You write the opening balance, then you write the effective interest, which is given to us 10%, interest received, which is given 7%. Then you have the closing balance, right? So the opening balance you are going to calculate is 3.5 million minus the discount which is given to you, right? 3.5 million minus this discount, you get 3.102 million, right? And effective interest will be 10% of this. Okay. And then the interest received of 7% will simply be the nominal value into the 7%, which you have to subtract. Then you get the closing balance when you find the sum of all of these three figures. Right. So this, it's important you guys know this working. You simply got the opening balance, which is the nominal value minus the discount. Then you have found out the effective interest, which is the opening balance into 10%. Then you have found out the interest receipt, which is nothing but the nominal value into 7%, right? This is always on nominal value. Effective interest is on the opening value, opening balance, yeah. Then you get the closing balance, which is 3,167,200. Now, if you don't pay attention in the exam, then this is the figure which you might write over here, right? But then this is not the correct answer because they are asking you the carrying amount of the financial asset on 20x7, which means you have to do working for one more year, right? So you bring down the closing balance 3167, and then again you have to do 10 percentage of this. You have to get the interest receipt will be which will be the same as the previous year, and then you will find out the closing balance, right? So which is 3.2 million approx, right? So your answer, final answer will be 3238920. Okay. See the question, look at the way they have asked you. They have asked you to nearest thousands and they have given you a figure like this. Right. So nearest thousand means how much? Nearest thousands means 3239. 123. Right. This is the nearest thousands. Now in your paper, if by mistake, if even if you found this figure and still in the answer section, if you are writing like this, 3239.123, if you're writing like this, then your answer is wrong. Why? Because they have already given you three zeros over here, right? So your answer should simply be 33239. Okay, so your answer over here is answer for the eighth question is 3239, right? Yeah, you're correct. Okay, so these are all the questions which we practiced today for the first day, and you can take a screenshot of this working note. Right, so pay proper attention. If even if you forget to read this to nearest zero hundred thousands, then again you will make a mistake, right? So it's important you read the question and you pay extra care. Right, this is very frequent mistake. Okay, so do you guys have any doubt in any of the questions we solved? Mhm. Okay, shall we move on? Okay, so I want to ask you guys, have you guys given any mock exam till now? Right, ACCA has released the FR pre-March mock exam. I think in the second week of uh, Feb already, right? So it's been like 2 weeks since the mock exam is out. So have you guys given any mock exam till now? Yeah, so that's the problem, right? You guys should, I think in maximum in next 2 or 3 days, you guys should give a mock exam and give proper evaluation. Also, when you solve paper on the computer-based examination platform, try solving the latest paper. Latest paper means the maybe the latest paper which was released by ACC at the September, December 2025 or March, June 2025. You can solve those. It's good that you have solved the specimen paper, but that's very old paper, right? So the exam pattern might be a little different. The difficulty level might be a little different, right? So try your level best to solve the latest paper. Okay, so please solve at least one paper before you go to your exam. There's no need. Okay, if you guys have some like I'm very impatient. I can't sit through a 3 hours mock exam. So you can do it in small batches. Right. First, you for 40 minutes you sit with section A, then you take a gap, then you next 40 minutes, next half an hour you sit with section B, then take a small gap, and then you sit again with section C. Right, in small installments. But then even in small installments, it's very important that you practice one mock paper, right? Right. So yeah, I just wanted to highlight that after you're done with your mock paper, it's important that you get it evaluated by a proper tutor, right? Evaluation services is very, very important. Once you give a mock, you might not understand where you're going wrong, where where is the area where you can increase your marks. So it's important you get it evaluated by a professional tutor, or if you have taken classes from somewhere, then ask your teacher to evaluate your paper, right? And then get proper feedback, because that's how you can improve. Right. And by chance, if you are a self-study student, then you don't have any tutor who can evaluate your paper, then I do conduct mock evaluation services. So what you have to do is that you go to the computer-based examination platform, you open the pre-March paper, and then you solve the question paper, right? And then you send it to me. I will evaluate your answer script. I will give you proper feedback on how, what other mistakes you're making, how you can improve your answer, and I will also provide you proper doubt support till the date of the exam. Right? We still have few days left for the exam, so I will give you proper doubt support. You will get proper feedback on the mock exam. Right? And this is approx. This cost around 399 INR or $4.4. Right? So if you guys do not have a proper tutor who can evaluate a mock exam, then you can consider sending it to me. You can get my mock evaluation services also. Right. So this was a little bit of promotion. Okay. So moving on to next slide is that since this was day one, I hope that this session was useful to you and you have learned something or the other. Right. From today's webinar, you have learned something new. Yeah, unfortunately, I have no idea, but ACCA is very conducive with the questions, right? So just try to solve how much ever content is available. Right. So, like how much ever, even if there are 20 mark questions, try solving them. And then for the MCQs, you can refer to the examiner reports, right? Like today we solved 8 questions. All of the 8 questions were from the examiner reports, right? So you can, for MCQs, you can refer to the examiner reports. And for the long question practices, you can open your CBA platform, right? Yeah, sure. Okay, you can solve. You can send me the mock by 25th Feb, end of the day. Okay. So yeah, you guys can take a screenshot. Whoever does not have my number, you guys can connect with me. You can ask your doubts, and if you want, I can share this PDF with you. I can share the Excel sheet on which I worked, right? And I can also provide you the WhatsApp group link if you're not in the WhatsApp group yet. Right. So, yeah, so that's it for the first day of the webinar. I hope that you guys were able to learn something new and you had fun solving the questions. I just wish that you guys were a bit more energetic and you guys solved the questions with me, but no issues. Maybe tomorrow we can solve more questions together. Tomorrow we will have a little bit of revision of the accounting standards and then we will solve section B questions. Okay. So you guys can take a screenshot of my phone number and you can contact me if you guys want either the mock evaluation or if you guys have any doubt or if you guys want to enroll for the third day of the webinar. Okay, so that's it from my side for this webinar. Thank you for joining. And if you guys have any doubts, please let me know.